Welcome back. As we look at the state's fragile insurance industry following Hurricane Ian, I spoke to State Senator Jeff Brandes, who for years has tried to warn his colleagues the system was broken.
Unfortunately, with this storm, I think what you're going to see is really devastation within the private insurance market. Many of these companies are going to go through their entire towers once they understand the level of losses that they're facing. And I would expect the number of insolvencies.
It seems like every time you and I talk, we talk about another insurance company that has decided to stop doing business in Florida or has gone insolvent. What's the current number that we're looking at over the past year or two?
Well, we've lost 6 companies in just the last 6 months. We've lost almost 10 companies over the last year and a half. And so whether that's them fleeing the market, them running off, or them turning their keys over to the Office of Insurance Regulation and essentially going into insolvency, what we're seeing is across the board in the state of Florida, a devastating impact, not just of storms, but of the market of property insurance overall.
Why is that?
It's a combination of things, but largely it's driven by litigation. Florida represents just 8% of U.S. property claims, but we are 80% of the litigation in the country. The simple truth is Florida can't be the most hurricane-prone state and also be the most litigious state in the country and expect to have a thriving property insurance market. Those two things just cannot coexist. And so while we're not going to be able to control the hurricanes, what we can do is control the amount of litigation. The legislature simply has to step up and put an end to it.
Now, I can hear trial lawyers in the back of my ear right now telling me that litigation is the only way to keep insurance companies honest, that insurance companies' interests aren't always the interests of homeowners, and so therefore homeowners need attorneys often on their behalf. How would you respond?
I would say absolutely. At times, there's absolutely true that just like in every other industry, there is good actors and there are people who are not great actors in this business. And frankly, people can have it and should have advocates if it gets to that point. But what we see going on in Florida today is manufactured claims, largely driven by one-way attorney's fees and assignment of benefits and roofing fraud. And again, if we just choose to stay on the current track, there is no limit to how high property insurance rates are going to be. In fact, in many places, people could be paying more for property insurance than they are for their mortgage, unless the legislature puts an end to the litigation at the scale that we've seen it. Understand, we see litigation in here, 100 times more than other states. Florida faced over 100,000 lawsuits last year in property insurance claims without a storm. The average for almost every other state in the country was less than 1,000.
I remember the legislature holding a special session just a few months ago to deal with the insurance crisis. Did the legislature not deal with this appropriately at the time?
It was too little, too late, and definitely not enough. I mean, essentially, the legislature essentially treated the flu when the insurance market had stage 4 cancer. There is radically more that needs to be done. The top 3 things that I would be doing is 1, end one-way attorney's fees, get rid of assignment of benefits like Texas and North Carolina have done, and allow for actual cash value or stated value on roofs.
So let's just break those down real quick, just because I want people to understand. What do you mean? Let's go through those things point by point.
Sure. One-way attorney's fees. The first thing that we can do, listen, if you want to go and file suit against your insurer, that is up to you. But the insured should have to pay for that litigation. Not the insurance company shouldn't have to pay for you to sue them, which is what happens in Florida. If you receive $1 more than what the insurance company has offered you, at least that was the rule a couple of years ago. Now the legislature has scaled this back some, but if you received $1 more than what the insurance company offered you, then the insurance company had paid all your legal fees. So we had cases where people would get $145 settlement from their insurance company and $40,000 worth of legal fees. That at this scale is just astronomical and was causing a lot of these problems. Second, assignment of benefits. Everybody has dealt with this type of thing with assignment of benefits, whether it's, you get a free windshield, all you have to do is sign this paperwork and we'll give you we'll fix your windshield on your car, or what's going on now, which is people coming door to door and saying, hey, let's go up on top of your roof and let me look around for some roof damage. All you have to do is sign this form and I'll take care of it with your insurance company. That's assignment of benefits. Many state, Texas and North Carolina, have both gotten rid of assignment of benefits. And all what that does is it reduces the amount of claims and the severity of claims that we see, because we don't have people manufacturing claims. And finally, actual cash value or stated value on roof. Listen, if you get into an accident in your 2010 Toyota Corolla, your car insurance company isn't going to buy you a brand new Toyota Corolla. They're going to give you the cash value for that vehicle. But in Florida, if you have a roof claim on a 20-year-old roof, the property insurer must replace the entire roof at $30 or $40 or $70,000 if it's tile roof expense. And so because you have roofs that are older, there should be a discounted value for the life remaining on that roof. The challenge we have right today is the incentive is when your roof gets old to file a roof insurance claim and have your insurance company pay for a brand new roof. That's happening across the state of Florida. In fact, about 70% of the claims that we're seeing right now in Florida are roof claims. And again, this was pre-Ian. So this is what was going on before we had these storms. Understand the property insurance market in Florida has lost $1 billion for the last 3 years without a storm. And that is not a sustainable market, especially if we give it in light of what's going on right now with this devastating storm.
I know one of the things that the legislature did do was create I think it was almost $2 billion or so of a fund to try to support companies to be able to buy reinsurance, which is another one of the reasons they often cite for driving up the market. A lot of people, though, saw that as just sort of an opportunity for insurance companies to get that money and then really offer very little back in return.
No, in fact, that's not what happened at all. What we're seeing across the country and frankly across the world is reinsurance prices are getting higher, and Florida property insurers are heavily dependent upon reinsurance. About 50% of every dollar that you pay in premium doesn't stay with your local property insurance company. It goes off to Bermuda or London to pay for them to purchase reinsurance. And the reinsurance is going to get clobbered after this storm, and prices are going to continue to go up for reinsurance. That's one of the major problems Florida has, is it's so heavily dependent upon the worldwide market of reinsurance. What the $2 billion did was just allow companies to buy into the state program at a lower level.
But you also believe that some of these companies that are operating in Florida are not going to be able to meet their burdens because of this storm and are simply just going to what? Walk away from homeowners?
I think you're going to have a number of companies that once they realize the scope and scale of their losses, because understand, you have 2 years in Florida to file an insurance claim. And then post that, you're going to have supplemental claims for 2 to 3 years. So you could potentially have insurance companies facing 5 years. On top of that is the litigation expense and everything else that you're going to see. I think some of them are going to turn in their keys. Now, it might not be 20 companies, but it'll probably be half a dozen.
What does that mean, turn in their keys?
Well, they'll go to the Office of Insurance Regulation and say, we are not going to be able to meet be able to pay our claims with the reserves that we have available, and therefore we're gonna essentially bankrupt the company and turn the company over to the Florida Insurance Guarantee Association.
And is that ultimately Florida taxpayers that will then have to pick up that cost?
Yeah, absolutely. It's Florida policyholders that end up paying that cost.
All the years that you were in the Florida Senate, you raised concerns about the insurance industry, and you tried to get your colleagues to take it more seriously, and yet, here we are now, and not a lot has happened. What do you believe has been the biggest problem in trying to get real reform within the insurance industry in Florida?
A couple of things. One, the trial bar is making a ton of money on litigation. They're making $3 billion a year suing property insurance companies and getting their fees paid for by the insurers. So they're heavily lobbying the legislature to just do nothing and kick the can one more year. On top of that, Citizens Property Insurance has exploded on us. It's doubled in the size in the last 2 years. And around the state of Florida, Citizens Property Insurance rates are about 50% less in the private market in many areas across the state. And so it's going to be very difficult for the legislature and the governor to recommend moving those rates to actuarially sound. Because frankly, what's going on right now inside of Citizens is they're losing money on every policy that they're bringing into to Citizens. And they brought in 60,000 policies last month, have over 1 million policies. But because their rates are set by politicians and not by math enough petitions, what we see is their rates are radically less in the private market to the point where they're losing money. Listen, if the private market is losing $1 billion a year and their rates are twice as high, then what is Citizens losing when their rates are half as much?